As we take a look at this week, the major narrative that's sort of sitting underneath all other narratives at the moment, aside from the Middle East conflict between Israel and Palestine, is the moves we've seen in the US bond market. We've finally seen buyers step back in at earnest, US 10-year yields flirting with that 5% level. We then saw last Friday a relatively large miss on the US non-farm payrolls report, which just allowed that bid into bonds that started midweek to carry on. It all started with Powell indicating, or markets interpreting his comments as indicating the Fed may be at peak interest rates, and then the weaker jobs report allowed that sentiment to continue into the end of the week. So as we start this week, we have to remember that's the major narrative driving the dollar, and we've seen significant weakness in the dollar that's been lifting all the majors. So it's interesting this week, we've got quite a light calendar in terms of US data. So it wouldn't be a surprise to see some of that residual dollar weakness from last week continue into and through this week with some significant US data to close it. So, looking ahead on Monday, very light on the data front. There isn't anything that's particularly strong here that we're really looking at for Monday. Tuesday, that's when we have an interesting economic data point, which is the RBA interest rate decision. Now, they are expected to hike interest rates from 4.1 to 4.35%. Now, if you just take a look at short term interest rate markets, they currently see a 62% chance of a Reserve Bank of Australia hike. Now, the reason for the uptick in expectations for an interest rate hike from the Reserve Bank of Australia was a strong CPI print and a strong PPI print, all of which has just had markets pricing in gradually more and more chances of a interest rate hike. So now we see it's a 62% chance. So what that means is if the RBA don't hike interest rates, that will be a surprise. And we could look for some Australian dollar weakness out of the event, with the majority of economists surveyed expecting a hike, with short term interest rate markets expecting a hike. If they don't hike, then we could look for some significant Australian dollar downside, and a simple pair to trade the Aussie against at that time of the morning would be the Aussie New Zealand dollar pair. And you'd expect the Aussie New Zealand dollar pair to fall sharply lower if the RBA don't hike. If they do hike, there's still sort of 38% chance of a hold that has to be priced out. So it wouldn't be unusual to see some more Australian dollar strength. Now, one pair that's sort of quite interesting at the moment is the yield differentials between the Aussie Swiss franc. Now, if you look here, you can see that the yield differentials between the Australian and Swiss bonds has just been pushing up higher and higher and higher. And certainly early in sort of October, the Aussie Swiss franc kept moving lower and lower and lower. Now, the Aussie Swiss franc is finally sort of catching up with the yield spread. But if the RBA do hike, you'd expect this to continue higher, and you'd also expect the Aussie Swiss franc to continue its way higher as well. So, Aussie Swiss franc buying on an RBA interest rate hike could also be expected. The Swiss National Bank are in a very different place to the Reserve Bank of Australia, and inflation in Switzerland is within the SNB's target. It's sort of 1.3%, I think, for the core, 1.7% for the headline. Now, the Swiss National Bank want to talk up the risks of inflation because a strong Swiss franc uh, reduces import costs for Swiss producers and Swiss consumers. So that helps fight inflation. So the yield spread continuing its way higher should also drag Aussie Swiss franc higher. So that's the RBA interest rate decision. Two-way opportunities there on either a hike or a hold. And best opportunity would come from a hold, with the majority of expectations edging towards a hike in interest rates. We then have some PMI prints out early in the European session. Could get some action in the euro if they're outside of consensus. With a very strong PMI print, should give the euro a little near-term upside bounce, but you would expect sellers on rallies because the ECB are probably at peak interest rate hike themselves. It looks like the ECB have reached terminal rate. So a strong print, you would probably expect to find sellers on the rallies. Obviously, a PPI print showing inflationary pressures could see a little bit of upside in the euro continue, but a lower kind of priority print worth just keeping an eye on. But I'm not expecting any fireworks from the European data this week. We then have some Fed speakers that are just worth noting. Now, the reason these are worth noting is the sharp move lower in the dollar and the sharp move lower in bond yields has been on expectations that this, non-farm payroll print has been enough to kind of seal in a peak interest rate for the Federal Reserve. Now, that's clearly not the case. And the old saying, one swallow doesn't make a summer. So one negative data point, one negative US labor data point, of course, is what the Fed wants to see, doesn't equal a peak interest rate, terminal rate for the Federal Reserve. So as a result of that, it is worth looking at these Fed speakers. Now, if these Fed speakers, bar Jeffrey, Waller, Williams, Logan, if any of them sort of confirm a peak interest rate for the Fed, then what you probably expect to see is further dollar weakness, further bond yield selling. So I'd look at dollar yen selling on any very dovish comments from these Fed speakers. I say that is worth looking at this week, given the market's reaction to the US labor print that we had on Friday. Heading into Wednesday, we've got some final inflation data out for Germany. Not expecting any fireworks from that. It's the final reading, so you shouldn't get much of a move. Obviously, Fed Chair Powell is speaking, and again, the thing to look for Powell is if he pushes back strongly against the Fed peak narrative, then you could suddenly see the dollar yen gaining. You can see S&P 500 falling. So best opportunity in current market sentiment would be if Powell sort of says, we may need to hike interest rates. You can't rule out interest rate hikes. We're not out of the woods yet. Markets are being premature. Anything like that, then you'd expect immediate upside in the dollar yen in sympathy with yields rising again, and expect immediate downside in S&P 500. So that's something to look out for. Same category for the Fed speakers coming out. Thursday, got Chinese inflation data, not expecting any fireworks from that. Governor Ueda speaking. The only thing to look out for Governor Ueda is if he starts to bring forward or hint that the Bank of Japan will be exiting negative interest rates, or that the Bank of Japan is going to be even more flexible with their bond yield curve control. So anything that sort of indicates the exit of negative interest rate policy, anything that indicates the exit of monetary policy, their current stance would be positive for the yen. So again, here, sort of any hawkish comments, you look for dollar yen downside. You could see significant dollar yen downside if there's any hint from the Bank of Japan that they're exiting negative interest rates. So watch out for Ueda. Same with the Fed speakers, as we've already discussed. SMB speak, and SMB, Moser and Schlegel. Now, they're worth looking at. Particularly if we get a hawkish hike from the RBA, that we could see some more Aussie Swiss franc upside. Now, if you look at the Swiss franc on an index level, you can see that this, big move in the Swiss franc into the end of October higher didn't make a whole lot of sense, because the Swiss franc was strengthening even as the inflationary concerns were falling for Switzerland. So we've been expecting the Swiss franc just tracking lower and lower and lower in recent trade. So if we have what we'd expect to see is sort of more hawkish comments from Schlegel and Moser, because they quite like a strong Swiss franc, because a strong Swiss franc helps them fight their inflation battle. So there's a bit of a vested interest to stress the inflation concerns. I'm not saying they're making it up that the inflation concerns aren't there, but Switzerland's doing pretty well in terms of their inflation battle, with headline at 1.7%, core at 1.3%, doing pretty strong compared to some of the other countries in the G20. They are actually at least within the SMB target band. So the best opportunity here is if either of them sort of indicate that, okay, we're feeling more confident now. We feel that we've won the inflation battle. Any rhetoric that moves to that direction, you'd expect the Swiss franc to continue its way lower, and so you'd look to pair it against a stronger currency at the time. On Friday, got the RBA statement on monetary policy. Just worth looking at to see if there's any further colour to the RBA interest rate decision on Tuesday. So just watch that. If there's a contradiction or a clarification, that has the potential to move the Australian dollar overnight. So just worth being aware of. GDP data for the UK, that is an interesting one. The outlook for the UK is sort of weak bearish at the moment, with the Bank of England changing their growth expectations last week for 2024 down to 0%, down from 0.5% prior. So growth expectations have fallen now for the UK, according to the Bank of England's projections. So that means if there's a really strong GDP data point next week, at the end of this week, that strong data point should allow the pound to gain. And I'd probably look at something like pound Swiss franc upside, could be quite a nice opportunity if we see a strong GDP print for the UK, if it comes in, well above markets expectations. So look out for that. If it's a weak print, that's only really what we're expecting. Bank of England's already signalled weaker growth for the UK. ECB's President Lagarde is speaking. Remember the ECB situation? They've essentially probably signalled peak terminal rate, and anything with the headline inflation, it fell. The last print fell to 2.9%, below the 3.1% forecast. So looks like the ECB are on the path to normal inflation, in the medium term future. So that should give President Lagarde more confidence, but just watch out in case she sort of pushes back against that. Any inflationary worries, then you could look for more euro upside. Finally, the US Michigan consumer expectations data. Now, this is the first opportunity that we have to test the reaction to that weak payroll data on Friday. So, throughout this week, if you just look at the reaction in the dollar, look at the reaction of the dollar on Friday, right? You see how strong the market is looking to sell the dollar. So we've got a whole week with that sentiment just not being challenged, apart from Fed speakers. This is the next opportunity when that sentiment can be challenged. So what we're looking for here is, if it's a miss, say this comes in, consumer expectations misses, current conditions, consumer sentiment, say we've got a sea of red, and 5-year inflation expectations, say, drop to 2.9, things like that, and it's just red across the board, then I'd expect more dollar selling to end the week. And I'd look for dollar yen downside, S&P 500 upside. Now, if this comes in very strong, we could see some of this dollar selling sentiment just move out the market. Even if it's just a retracement in the dollar, it wouldn't be a surprise. So if this came in very strong, we saw a sea of green, consumer expectations unexpectedly rise, inflation expectations hit 3.1, current conditions, consumer sentiment, if it all beats to the upside, if that's the case, then you'd expect dollar upside, and I'd look for something like euro US dollar downside. Okay, so that's quite a light calendar, really, with a few sort of central bank speeches just to look out for that could be edging sentiment along the way. The major narrative is that, has the Fed reached peak interest rates? So expect the push and pull on that narrative to be the major driver in the market. However, the other factor we cannot forget, which is relevant all week, is how the Israel and Palestine conflict develops. If we have Iranian involvement and Iran gets involved, then look for sudden upside in WTI Brent crude and upside in gold. Okay, they're the go-to risk instruments for a acceleration or a spillover from the current situation if we get Iranian involvement, and that could result in significant upside in WTI up to $92, Brent crude up to $92. You'd expect a sharp move higher in gold, pushing above $2,000 an ounce. So they're the main things that we are watching for this week.